Now, Wall Street has been defined by turbulence over the last few weeks, which has many Americans on edge. From our investment portfolios, 401k, uncertainty in the markets always brings anxiety along with it. So what do we do, right? Do we buy, do we sell, do we hold, all those things? Here once again with expert advice, Cory Sickles, president of Safe Harbor. Good to see you, Cory.
Good to be here, Robin.
All right, I think it is just it's all the emotions, or I think it tied to our money in so many ways. So we see right now what's happening, the current state of the markets, and everybody's kind of anxious about this, right?
Yeah, you know, we had a great January. Since February, you know, the Nasdaq's down over 12%, the S&P's down around 8 or 9%, and the Dow Jones is down about 7% over the last 30 to 40 days. So I think it has a lot of people worried.
Yeah.
And, you know, one thing I always try to tell clients, there's two things. One is allocation's always key. If you're allocated the correct way, then you can handle when the market does go this way.
Yeah.
And the other side of it is what people really need to think about. It's not timing the market, it's how long you are in the market.
Okay.
And the longer you're in, the more successful you're going to be.
And I will say, although we hear about these drops and they seem so significant, are they that rare? I mean, because you look at historically, the percentages, right, that have been tied to drops. Is this something that has happened before?
Yes, it has. And even when you have a really good market, you still have what we call corrections.
Okay.
And one of the things you'll hear about if you're listening to the news right now, we're in correction territory. And usually what that means is we're down about 10% from the previous high, which is kind of where we are right now. So there's opportunities, when that's actually taking place. The nice part about it, if you have a 401k, is you're buying every paycheck, which means you're buying high and you're buying low. So this is a good opportunity to make sure that you're still contributing. You're buying low. And the other side of it is there is a chance to be able, if you're on the sidelines, or maybe now might be the time to maybe look at maybe getting aggressive. Obviously, you want to talk to your advisor before you make those decisions. But it's scary, right?
Yeah.
I think a lot of people are scared about when the market goes the other way, but there's always an opportunity, and the thing is not get so scared that you completely get out of the market.
And I was just going to ask, Cory, do you have clients calling you being like, I don't like the feeling this is bringing me, I don't want my money there. Can you just get me out of the market entirely? Are you dealing with that?
We get a few, we do get a few calls from that, but one thing that we really try to do is we try to be able to make sure our clients understand how they're invested. Not all their money at this point in time is going with the market.
Right.
They might be in some different types of products that we have, like fixed indexed annuities where you can't lose any money, or maybe it's life insurance, or we have some other products, like the buffered products as well.
Yeah, expand on that, because you have long talked about how you can help your clients be protected really from these big drops. So how does that buffer work? What is that? Is that something anybody can kind of take advantage of?
It is. I mean, here's the way I always look at it. Everybody wants to be in the market.
Yeah.
Really the question is how much do you really want to be in the market?
Okay.
Right? Because, as you age, you get a little bit more conservative. We have what we call buffered products. And all it is you get to invest in the market for a period of time. We'll just say 18 months for right now, for example. And we have different levels of what we call buffers. So we have like a 100% buffer, which means during that 18 months, if the market is negative, you don't lose any of your principal, but you're going to make less because the cap, we have what we also call a cap. Your cap will be lower. So like right now, we have an 18% or 18-month buffer. During that time, you can make around 13%.
Okay.
If you want to be a little bit more aggressive, we have a different type of buffer where it's maybe like a 15% buffer, which means now you keep it in there maybe for 2 years. If the market's down 20% during that 2-year time frame, then you only lose 5.
Okay.
Right?
Yeah.
So if you lose, say for example, it's down 10, you're within the buffer and you don't lose anything. So you're going to have a higher cap. It might be uncapped. And whether it's the Dow or the S&P, we have to get down to the details about that.
Yeah.
But the whole point of it is one thing we really try to do for our clients is get you in the market, but with what we call protection.
Right, to have that peace of mind, so you're not sitting back saying, what's happening to my money? I'm going to be, not be able to retire when I want to, not be able to do the things. Okay, so Cory, again, you have 2 locations. If people don't have a financial advisor as well, this is a good time to sit down, right, and talk to the experts because they can lay out exactly what's going on.
That's exactly right. We can review what you have, review where you are.
Yeah.
Again, all of our meetings are complimentary. There's no financial obligation. We have a location in Easton. We have a location in Dublin. If you want to do a Zoom, we can also do that as well.
Okay. All right. All the info on there, safeharboroh.com, obviously, the website. Thank you so much, Cory.
Thank you, Robin.